Okay, I'll just wait a few minutes. Thanks everyone for joining. As people start to join, I'll wait a few minutes, actually a few seconds, not minutes, maybe just one extra minute before starting off. Okay, so I guess we can kick off. Hello everyone, Happy New Year. Thanks for joining. This is our first webcast of the year, obviously. We normally do one every year. I actually just saw that this is our 52nd webcast. We've been doing this for the last 6 years, so pretty consistent. The session today is about material ledger. The title is Material Ledger Actual Costing in S/4HANA, Overview and Reasons to Activate It. Our speaker is Dawn Watts. She's an SAP FICO consultant with Guided Tech Solutions. Slide change, please. So what are we? What is ERPfixers? We provide top quality experts in the core SAP modules. Now, actually, when I started this company 7 years ago, it was originally a collaborative platform for customers and SAP consultants, but it's evolved into a more exclusive network of core consultants in the core modules and normally deal with more experienced consultants. That's how it's worked out, and our customers seem to receive that better than our previous model. We have several offerings. We do like your typical soup to nuts SAP implementation. We do support. We help with aligning best practice SAP content and processes to what the business wants or hopes to get to. We are specialists in converting customers from that don't use material ledger or don't use actual costing to material ledger, actual costing, parallel valuation. We have several product costs, cost component reports, as well as actual costing reports that we have, which are custom made, which are not available in S4 or ECC. And then we also, nowadays, everybody's gearing up for S4HANA, so we help to guide customers on the roadmap, what is available, what is going to be sunset, what do they need to do to prepare beforehand. If you need anything else, and you need any other information about our website, go to www.ERPfixers.com. We also have blogs that we put out there almost every couple of months, right? And it's all free, just like most of our content is free. Just go on our website and you'll see it. Next slide, please. So our speaker, Dawn Watts, is an experienced SAP consultant and the founder of Guided Tech Solutions, which is an SAP consulting company specializing in SAP finance and controlling. She's led several SAP project implementations and support teams in finance and controlling for 2 decades. She has experience working with financial, customer service, and manufacturing teams in the telecommunications, medical services, medical devices, flooring, industrial, life sciences, and energy industries. So I'm going to hand over to Dawn and you're in really good hands. This is, as some of you might know, this is one of my favorite topics, and Dawn is totally a very good resource for this topic. So please go ahead, Dawn.
Thank you, Paul. It's great to be here today and to be able to share on this topic and to be, have an introduction by, one of the leaders in the industry within SAP. So thank you so much for hosting me today. And I'm glad to be here to speak about material ledger. So just to go over some, points in regards to the topics that we'll be covering today. So we're talking about material ledger actual costing, but as we go into that, I really wanted to start with an overview of standard costing because that really builds into material ledger actual costing. and some of the challenges with it, and then go into, what is material ledger actual costing? What does it look like in the SAP S/4HANA system? Some of the steps to activate it and configuration, and then go into the actual costing cockpit and the alternative valuation run. So, and then I'll wrap up with some pros and cons of activating and using actual costing in the S/4HANA system. So we've got some good content here today, and I'm excited to be sharing this with all of you. So really, from a standpoint of material ledger, the material ledger actual costing really provides true accurate product costing and inventory valuation. And that has an increasing importance in today's competitive business landscape. So, as the cost and the inputs into the cost of materials that are being produced, as those fluctuate, it's really important to have a good picture of what is the cost of the products that your company is producing and what's the valuation of your inventory. And with the move to S4, the material ledger activation is required. However, that activation of material ledger is just the beginning, right? So you go through that process of, if you're upgrading to S4 or if you're doing a greenfield implementation, there are different options there, right? But as you go in, it's required to have a minimum baseline of material ledger. But one thing to note is that it's not required to implement actual costing. What I'm going to be talking about in this webcast is really, how that material ledger actual costing functionality, that next step, can really benefit companies across the different financial and regulatory environments. So really want to share on that and show a view of, okay, this is required. This is the minimum just to have material ledger. And Paul's done some really good presentations on that conversion process. But what I'm doing is taking it to the next step to say, okay, there's this functionality out there. It's already included with your license, and it can really enable much better reporting and valuation of your inventory. So when we talk about standard costing in SAP, so we're establishing the baseline of costing valuation in SAP first, right? So that baseline is really around how do you cost your materials. Standard costing has been the go-to, almost out of the box with configuration setup approach to valuing your inventory in SAP for over 2 decades, as long as I've been working in SAP. So, and it's used to provide a value for the cost of goods sold and inventory, and it gives that structure, right? So it's a really good, solid functionality that provides the structure of how you value your inventory and how you use that for your cost of goods sold. And it's usually made up of, 3 core components. Each business can set up their own cost component structure as they see fit. But the ones that I've seen most often are material, labor, overhead. Those are the kind of core groupings of those cost buckets within a standard costing. So I have an example here in the screenshot of what a standard cost estimate looks like, right? And then also, what the cost components, depending upon how, an organization sets up their cost components and groups their cost. This is an example of a cost component split. So then we move into calculating the standard cost of materials in SAP. So in order to calculate the cost, you have to have your material components, your raw, your semi-finished, any packaging, any additional cost of purchasing those raw and semi-finished materials or manufacturing them. And then you have activities. So really this is your labor, your machine, all of the costs that bring in and add value to those raw materials. And the standard costing can be used to set the standard value for raw materials and semi-finished and finished materials. And for raw materials, it's usually based upon a purchase info record. That's a pretty standard best practice, is to use purchase info record to enable that value for if you want to have standard costs for your raw materials. There are some other methodologies as well. And that's if you're not using moving average for your raw materials. And then for semi-finished and finished material, so this is really where that standard costing functionality and program language is all coming together to roll up all those costs. So roll up the material component costs and then roll up the labor costs and the machine costs that go into adding value to rolling up your material. And then once you've gone and you actually set a standard cost, that standard cost can be used to set your planned and your target values on your production orders and your process orders. So as you're producing that materials, this is saying, this is what I plan for my cost to be based upon, this is my lot size. And then you get into a target value, which is really to say, this is what I actually produced. And this is the standard, times that quantity that was produced. So the standard cost really provides that value. So you can say, this is my plan versus the actual, this is my target versus my actual, and really get some metrics back from how well you've produced the material and how well you've managed your cost. The standard cost utilizes material component prices and activity rate values. So it brings in those price of those raw materials, and then those activity rates are added on top. And technically, standard cost values are classified as plan values. So you'll see that if you're in SAP, you'll see a material cost estimate. So that term estimate is really to say that this is the best estimate that we have for the cost of this material. And then when goods movements occur, that standard cost is used to value those goods movements. And then you can see those variances between, okay, here was the standard cost. Let's say, for example, you're procuring a raw material, right? And you have a standard cost for that material, and let's say your procurement price is different, then that's where you really get into your variances of what was my standard cost or what my plan and what was my actual. And we'll go into the variances a little bit more in the next slide. So then we talk about variances to standard. So, I was just speaking about purchase price variance. So that's the raw or purchase material valued at standard, and then a comparison to the actual. And this is really important as we really go through variances to standard cost. The variances are going to be used in the actual costing. So it's important to understand, okay, first, what are our variances? And then how is that used in the actual costing calculation? So from the next piece of variances are the semi-finished or finished goods, which are valued at standard. And then there's variances like I was describing between your target cost, which is based upon the quantity issued to stock, and the actual cost of production. And the SAP has basically these 8 standard variance categories. And so these variance categories will tell you what type of variance, what really is the driver or the cause of the variance in SAP. So if there is a difference in the input price, if that price was different from what you had planned for that component material, if you use mixed price or mixed costing, mixed price variance. So all of these different categories really help to give detail to, what is the driver for your production variances. And I won't go into every detail here because this is really, there are whole presentations that can be done on the variance categories. But I just want to really talk about, like, these are your categories, and these are variances to standard costs, which are going to be used in the actual costing calculation. So some challenges with the standard costing methodology. So standard costing, like I said, it's been, it's pretty much an industry standard, especially in the US, right? And even outside of SAP, standard costing is a methodology that's used to value inventory and cost of goods sold. But one of the challenges that we've seen over the years is that there can be, issues with the accuracy of your standard cost. So it uses a calculation based upon the current raw material costs and labor rates. And it revalues all the inventory at the current purchase or production cost. It doesn't consider that, hey, your inventory on hand may have a different cost. Your inventory on hand may have been produced, let's say 3 years ago. If it's, has a valid shelf life, it may have been produced 3 years ago, and it now when you roll it, the cost has gone up, the value has gone up, but it doesn't consider that that material, if I look at the true cost of that product, it was produced 3 years ago at, let's say, a lower cost. So standard costing is kind of this is the point, you value it at this value. It's not as much of a, oh, let's go and see what that, specific at that time, what this inventory, this product costs. And I mean, you can look at it from a perspective of it's more of a blended cost, right? So if you're looking at standard cost, you can say, okay, well, it's a blend. It's, I don't necessarily track things on a very detailed level basis. So therefore, or my company doesn't. So therefore, I've got to come up with the best approach to how I value the inventory. And there are also, guidance from the regulatory and the accounting authorities to say, okay, this is how you value it. But it doesn't give you as accurate a picture of what is my inventory really valued at, what is my cost of goods sold, for this period. So it can, have some skewing of the values. And common standard costing practices include the calculation of standard cost on a periodic basis. So that's another thing, is that what I've seen in practice is a lot of times companies will wait, let's say, a year. They'll only roll their costs on an annual basis or maybe a quarterly basis. And some companies even want to, have been driven to say, we want to roll it on a monthly basis. Now, there's a lot that goes into that, to rolling up your standard cost on a monthly basis. So I would say we'll get into that a little bit as we talk about actual costing. But if you're valuing your inventory and rolling up your standards on a monthly basis, I really think you should look at actual costing, because it's doing much the same thing with a better level of detail. But the thing is that the point here is that standard costing practices and that calculation of the standard on a periodic basis, especially if you're waiting, on an annual basis, that is not going to give you as up to date a value for your inventory and your cost of goods sold. And so with these approaches, standards can easily become outdated and unrealistic, right? So especially if you're in a season of fluctuations of increases in prices, some of the things that we saw with inflation and with COVID, post-COVID, and things like that, then your standards can really become outdated quickly, and you don't have a good picture of what's the value of my inventory. And then when you look at your margins, you're not seeing a true picture of your margin. Also, kind of going back to the changing cost structures. So, in these dynamic environments, costs can change rapidly, right? And so this really drives that. Your raw materials can change, and also, your labor. So we also saw that with COVID, with labor, prices changing. So those fluctuations can really influence the valuation of your inventory and the values of your cost of goods sold. The standard costing functionality, especially in SAP, tends to be quite rigid in nature. And it doesn't really adapt well to, those changes in the costing structures or production methods or product designs. It's not easy to just turn and say, okay, well, we're going to change this methodology. So it gives a good consistent approach, right? You can say this is the approach for valuing your inventory, but it's really rigid and doesn't really flux as much with what's changing in the environment. And additionally, there's a complexity in variance analysis. So, as I was talking about, you have all these variances and where the variances are coming from, the variance categories, and really finding ways to attribute those variances to the appropriate materials, and the whole value chain can be complex and time consuming. And it can make it challenging to make timely and accurate corrective actions. So I'll get into the next slide a little bit in regards to some of the accounting standards, and especially as we look at more of a US-based company, because one of the reasons that I'm talking about a US-based company is that material ledger, in my experience, has typically, it kind of grew up out of environments such as Brazil, where there was a lot of fluctuation in costs. And so there were, specific statutory requirements, let's say in Brazil, where you have to use actual costing. But it was this tool that it hasn't been as widely used in the SAP environment because standard costing did, for the most part, what people needed it to do. And, you know, as this environment has changed, and as the programs, and specifically Material Ledger, have provided more details and have really become more widely used, there's a little bit more of a focus, like, what can Material Ledger do for me and do for my company? So that's why I'll get a little bit into, you know, some of the US GAAP specifics here. But I want to also say that this is something that can be used across geographies, but opening it up to the US for the first time and saying, hey, this is something that could really be used for companies where you have a requirement for US GAAP, and specifically how that's applied. So just some challenges here as it relates to US GAAP. So just referring to some specific, you know, FASB sections, standard costs in US GAAP are acceptable, but they have to be adjusted at reasonable intervals to reflect current conditions. So, so that things don't get out of, you know, whack, or that the valuation is not too far off. So you can use standard costing, is what I read this to say, but you have to make sure that you adjust it for those variances, you know, on a periodic basis, and make sure that it's aligned with one of the valuation bases. So if that's average cost, first in, first out, FIFO, last in, first out, LIFO, or estimated average cost. So it has to really meet those existing recognized bases. And additionally, there are calculations that need to be made to check to see if you have a lower cost or market, or a lower cost or not reasonable value. So you have to make sure that, you know, your valuation for your inventory is, you know, close to what the market. So if the market price or value of that stock is lower than your standard, then you're going to run into issues there. So there's some additional requirements that kind of lay onto standard costing as we apply it to US GAAP. And so historically, US companies have favored using standard costing for inventory evaluation, and they use you know, these adjustments to go in and basically revalue their inventory with the variances. Now, in my experience, this previous companies I worked for called this a cap variance process, right? So the capitalization of those variances to make sure that they value their inventory correctly. And that's can be somewhat time-intensive calculation, going out and going and capturing all those variances, attributing them to the correct product lines, or company codes, making sure you're at least at the company code level, but likely a little bit below that, to make sure that you're attributing the variances to the correct level and to the correct, you know, products in your management structure. And so that calculation has to be done. And then usually the companies will have to, because they're doing this calculation usually on a quarterly basis to meet the reporting guidelines and filing guidelines. So that calculation is done, and then they also look at it to accrue it, and then amortize that over the turns of the inventory. So there's a process, like additional manual steps that need to be done to take those variances, you know, attribute them to the correct product lines, and then amortize them over time. So that's some challenges that companies are going to face, and some additional work on top of standard costing that they'll have to do in order to get the correct valuation from a US GAAP standpoint. So, you know, some impacts of these standard costing challenges. So I talked a little, you know, more in regards to like US GAAP and those pieces, but just overall, when we talk about the standard costing challenges, you know, here are the three like top, you know, challenges that you would face. Profitability analysis. So, and also called margin analysis within SAP. Your standards getting outdated or having unrealistic standard costs can paint a skewed picture of your cost of goods sold and margins. And that can lead to incorrect areas of focus when you're looking at how do we improve our profitability overall? How do we manage our profitability as a company? So with that view, you're also thinking back to, okay, if you're a US GAAP based company and you're taking those variances and you are capitalizing them into inventory and you're amortizing them, right? Well, first of all, when you capitalize them, what level are you capitalizing them at? Are you capitalizing them at a company code level? Are you capitalizing them at a product line level? Where is that happening? Because wherever you capitalize that, well, that's where that value is going to sit. And then as you're running a profitability analysis, you're only going to get those, that true picture, or as close to a true picture as possible at that point, at the level that you capitalize those variances and amortize them. So there's, can be some challenges in really how you're looking at how profitable is, a product line or even an individual product. If you want to say how profitable is this individual product, well, if you capitalize your variances at a product line level, you're not going to go down to that product level. And then inventory valuation. So really, what does your inventory look like? What is it valued at overall, right? And, this is really saying, okay, this is an asset. So we've got this inventory sitting here, a big asset for a company if we're a manufacturing company, and is it valued correctly? And it's valued correctly in all the different levels, right, of valuation. So it's one thing if you capitalize a variance and you capitalize it at a raw material level and amortize that over turns, but then is that variance then flowing up to the next levels? Like, what does that look like? At what level are you looking at your product line? Your product line may be, up to and include, semi-finished and finished goods, but how is all of that flowing together? And what is that really looking like from, your inventory evaluation and your margin analysis? And then as you look at inventory, that also flows into your working capital calculations, right? So if your inventory is not valued at a discrete level, then if you're looking at working capital, what level you're looking at your working capital calculations and how does that flow in there? And so that those costing challenges can flow through to your working capital calculations as well. So then advantages of material ledger actual costing. So kind of comparing the two, we're talking about these challenges we had with standard costing. Well, as you bring in material ledger actual costing, it really takes away some of those disadvantages, right? So you can get more accurate profitability analysis. So more precise picture of the cost of goods sold and margins by product, right? So you're no longer like saying, okay, well, I can only go to this product line level, because you can really see those variances down to the discrete product level. And additionally, there are some choices that you can make in the configuration setting that says, okay, when we revalue this this cost of goods sold, and I'll show that in later slides, when you revalue that cost of goods sold, you can really have that revalued, on a very detailed level within your margin analysis. So then closer alignment with US GAAP. So I think I explained a lot there, but basically you're really having a valuation that is much closer to, more of an actual cost and how you would value your inventory for US GAAP purposes. And it takes away that need for those adjustments, those, as I call them, cap variance adjustments that would get you to your balance sheet valuation. Inventory evaluation, again, following the same lines, and the variances are really incorporated into the valuation in the period they're incurred and rolled to the related high-level materials and products that they're consumed on. Those working capital calculations are based upon inventory, the evaluations that are more accurate as well. And then automation of financial processes. So that variance capitalization and analysis process, right? That was a very time-consuming process. Now there's a lot of automation with actual costing. It really helps to take those variances and roll them up, and you really have some screens and a cockpit within SAP to really better analyze your variances and see the fluctuations in the cost of your materials and the value of your inventory. So what is SAP Material Ledger? For those of you that haven't had much exposure to SAP Material Ledger, it being somewhat of a less used or, enhanced newer functionality within SAP, basically when it boils down, Material Ledger is a set of tables that collect transactional data for materials. And in essence, it's a subledger of your inventory. So, on the left side, you'll kind of see some of the historical tables that, are sort of your material valuation and those related tables that have been existing in SAP since basically, early R3 days type of things. And so on the right is really your S4 material ledger and related tables. So these tables on the left, especially like the history tables and that, those are migrated over, and you'll see a lot more detail in your universal journal in AC Doc A. And you also have material ledger documents. So when you convert from an ECC environment, right, do a migration to S4, these tables get created and start getting populated. So you have all of this detail, and you'll have material ledger documents created for all of your material related transactions. So just to show you that, like, what is material ledger? It's really, the tables that are underneath it that really provide you, some of the header detail, the record level detail, and all of this information together, and really give a better picture of the subledger for inventory purposes. So one of the key material ledger functionalities that is basically enabled when you activate material ledger and when you upgrade to S4, whatever path you take to get to material ledger, is the parallel valuation. So this is the functionality that's basically required when you activate material ledger. You can decide how many currencies. You can have up to 3 currencies, but this really gives the baseline for really a multi-currency view in SAP going forward, and this is the comes with the migration approach. So you already had company code currency, in your SAP system if you're in ECC, and you'll have it in S4 regardless. But the next piece is group currency. So with material ledger and the parallel valuation approach, you get company code currency and group currency, right? So you can see your value. If your group currency is different than your company code currency, then you'll see the value in both of those currencies. You also have the option for a third currency. For example, if you wanted to have a transfer pricing value. So you can have the values for your material in these 3 currencies. And before you activate material ledger, a note, make sure you know which currencies and valuations you want to use. It's, from what I've heard, once you activate that, it's not like you can go back and easily bring in a third currency. Let's say you only decide to go with 2. If you then later say, oh wait, I needed a third currency, it's not that simple. So make sure that you know which currencies and valuations you want to use before activating material ledger. And below, I just have an example of what that looks like, right? So in this example, I have a raw material with plant PP01 and the cost estimate number associated with that. And so you'll see that this data can be held on a period basis and really show you for each currency type, so 10 being company code and 30 being group currency, you can see, okay, what's my standard price, and also what's the periodic unit price, which is a key value when we get to actual costing. And then if you've got an optional third currency type, then you can bring that in and also have a standard price and a periodic unit price value for that. So material ledger functionalities, this really, I wanted to focus in this screenshot on the fact that you have here a periodic unit price in the accounting one view. So for those who haven't seen material ledger before, this is a key difference in the material master record when you activate the material ledger, is that now in this accounting one view, you have those multiple currency views, right? Whereas before you just had one. So this is key to note that you have that. And then also you have the periodic unit price. So that's really what actual costing calculates and populates. And then a couple of key things about actual costing is that it evaluates all goods movements within a period. It uses the standard price. So again, we've started with standard price. It uses that standard price, and then it takes all the price and exchange rate differences and all of those variances for a material, and that's all collected in the material ledger. So you have that view of it. And then at the end of the period, the actual costing takes that, all those price and exchange rate differences and all those production variances, and all those pieces, and it uses that to calculate an actual average price called the periodic unit price for the period. So once you're able to calculate that, then that actual costing value can be used to update your inventory value and really establish a new value for your inventory. And this can be done either in the perpetual inventory accounts or in accrual accounts. So you have a choice of whether you want to completely revalue the inventory and the material and set that as the new standard cost going forward, or whether you want to basically accrue that difference into accrual account, but it's still a part of your overall inventory valuation. So this is an example of a posting where you had that accrual basis and you're posting the revaluation of inventory. So one of the key differences as well with material ledger activation is that you have this CKM3N price history screen. So this is what the screen looks like without actual costing. Here you'll just see basically a price history, but with just material ledger base, no actual costing, this is what it looks like. So then if you have actual costing activated, this is an example of a material where you have that actual costing, the material price analysis, and it's showing you all of the differences, all of the basically history and all the details that go into calculating your actual costing. So here you have basically like you have revaluation coming in, you have goods receipts, you have production, all of those pieces, right? All of those goods movements and fluctuations in your stock quantities, as well as the values and variances associated with them are calculated in this screen at a very detailed product level. And so here it builds up in this information, and we'll go into the actual costing cockpit later in this presentation, but it builds up all that information to really determine the actual price or the actual cost of the material. So here's an overview of the steps to do and set up actual costing configuration within SAP. So on the left, I have these are the main core configuration, like individual configuration areas. And then on the right is all the account determination that needs to be set up in order to enable actual costing. So there's some decisions along with this that need to be made, as far as what you want your actual costing to look like, how do you want it to update, whether you want to activate the actual cost component split if you have your cost component split on your cost of goods sold already, whether you want WIP at actuals, all of these different settings that need to be activated and set up in order to be ready for actual costing. And then the configuration of all that account determination. So if you're in OBYC, all these different account modifiers need to be set up and configured. So then once you have your configuration to a state where you're ready to activate actual costing, you'll need to do a few steps to actually activate. So kind of step back a little bit. You want to do some review before you activate, because you want to make sure that you've kind of closed some things off, so that as you really want to do your material ledger activation over like a month in, you want to be able to close out a previous period and start your activation with a new period. So in order to do that, you really want to carry out all the material postings and all those CO period and closing tasks. Make sure that all of that's done for all prior periods and it's all clean and ready to go. I mean, that should be pretty standard, even if you're using standard costing today, or if you're using material ledger, with standard costing today, that should already be in place. And then, closing out your production and process orders as much as possible. You really want to make sure that, like, going into this, you're not leaving a lot of stuff open that could cause some variances or differences. You also want to roll forward your period and release any standard cost estimates that you had calculated for the period. So then the actual costing activation steps. One of the things that I would like to stress here is ensure you have all relevant SAP support notes applied. So there's been some transition with the actual costing functionality. In some of the earlier versions, there was really a migration, as the S4 material ledger and actual costing functionality really matured. There's been some updates and things like that. So making sure that you have all the relevant SAP notes applied is important, even if you're already on an S4 version. And then, activating actual costs in the configuration and importing those transports, that would be your next step. And then going through and verifying that. You want to verify that, that everything is activated that you have set up. Some keynotes there is you want to decide, when to activate your actual cost component split. So this is important if you decide you want to activate the actual cost component split. There's a note here that talks about that process and just being aware of that. And then, basically you're going to go through and change your materials to say, whether you want them to be part of the actual costing. So really changing them from a 2 to a 3, so that you're saying these materials I want to be on actual costing going forward. And there's a couple programs here. So just to note that, like, there was after this note 3256792, that there's a new startup program to bring in to do your activation of actual costing, and also your actual cost component split. So you'll see that as well if you're doing that subsequently. So what it means by subsequently here is that you've already activated material ledger, and now you want to activate actual costing subsequently. And just to note that the MLCCS_startup is obsolete for S4. So that was, if you're for the cost component split. And the actual cost component split is created for materials with price determination 3. So price determination 3, as I talked about here, you did that mass change from price determination 2 to price determination 3 to get that to, these are the materials that you want to evaluate on an actual costing basis. All right. So we'll get into the actual costing cockpit. And just this is an overview of what it looks like. I really wanted to show this because, for those who have questions of like, well, my company's been running on standard costing for years, and what does this look like with this new material ledger and material ledger actual costing? What I'd say here is that this cockpit is very similar to a standard costing run cockpit, right? So, I mean, you've got, steps, that it's a very similar kind of flow. And if you're in a situation where you're running your standard cost like once a year, and then you're going through and running CAP variance processes, really running an actual costing on it, and usually the recommendation is to run actual costing on a monthly basis. But running this, to me, it's kind of equivalent to running a standard cost and then running your variances and analyzing that on a monthly or quarterly basis, because this really takes you through and you're analyzing your variances as you're going through this, because you're saying, okay, this is what my standard cost is, and here are my variances, and this is what I calculated. actual cost or periodic unit price would look like. So, before you run an actual costing run, some preparation steps. Ensure all the goods movements are completed for the period. So, standard process, make sure everything's done, make sure all the price variances are posted. So, you don't have a lot of lagging activities that are going on while you're running the actual costing run. And then, making sure that you have all your production variances, all your settlement jobs have been done, everything's ready for actual costing. And then if there's any variance, any adjustments to the variance accounts, that that's included as a part of the process or before the process. So if you're doing any MR22 adjustments, let's say you go in and you see like somebody put in a weird number of value for a goods receipt and it's really throwing your values off, then you can do an MR22 adjustment to that. And then if you're calculating or updating your actual activity prices, that's part of that as well. And make sure that the new period is open to run the actual costing run. The actual costing run is transaction CKMLCP for S4 version 1610 and higher. And this just shows a screenshot of this setup. So similar to a standard costing run, you enter the costing run name, period, and you select that it's an actual costing run. Then when you're creating the run. So this screenshot really shows you, okay, you have actual costing run is usually what you're going to select for your costing run, but there are other options, right? So you can do an alternative valuation run with run reference or just a classic AVR. And I'll get into the classic AVR later on. So then you create your run, you're assigning your plants, similar to a standard costing run, you would bring in and you would assign the plants that you want to run your actual costing run on. Just to note that if you have materials that are cross company, where let's say, raw material is across company or cross plant, then you really want to roll up all the relevant materials together in one actual costing runs, because those variances are multi-level and they're going to roll up from the lower level up to the higher level and cross plants and all those pieces. So if you have stock transfers and things like that, you want to make sure that when you're running your actual costing run, you're doing it for all the relevant plants and company codes. And then you want to update your selection variant. So just some steps here to say if you want to do background processing or not, and whether you want to save the log, but it's going to copy that information over from your costing run detail as far as what the costing run is and the posting period and those things. And then basically update your preparation variant and your preparation steps. Here, this is one thing that's key to note is that you can process the preparation step again. So you have an option of, if you want to process the same material again, like let's say you corrected something and you're coming back to process it again, you can do that. And then this is the settlement variant. And again, you have that do not process or process again option. So, you have an option to, you've gone through and run the actual costing, you want to run it again. Let's say something changed. And you want to, some other options as far as negative price and convergence of cycle. I haven't really seen a lot of, specific examples of where you need that error management, but it is, this is kind of the standard as far as what you would check there. And then your post-closing, right? So there's some key settings here that you want to pay attention to. First, at the top, you'll see that it says execute. So that means you're executing your post-closing, which is really going to actually, take that actual cost and post it. And you want to say whether it's an execution or a reversal run. You also want to say, like, do you want to reevaluate your material? So, this is a point where you're saying, do I want to basically set that to be the standard going forward, right? So if I reevaluate that material, then it's going to take that periodic unit price or the actual cost and set that as the standard going forward. So that's a key decision point there. And then revaluation of consumption. So this goes back to the piece where I was talking about like your margin analysis, and whether or not your cost of goods sold is going to get revalued, as well as your consumption. So if you consumed a material into another object, then revaluing that consumption as well. And as well, whether you're going to set like your CO account assignment. So you know if it's been consumed into another CO account assignment, let's say an internal order or a project or something like that, then it's going to use those CO account assignments. So then processing options, background processing, whether you want to run it as a test run, I definitely recommend running a test run here. It just, you can see what it's going to look like and if there's any errors or anything like that. And then also saving the log. And then you've got whether you want to update the marked prices, right? So whether you want to take that periodic unit price, before you were talking about revaluing, you want to set that as your marked price. So if you want to set that as a marked price, which can be released in the new period, right? So one thing to note is that from a timing perspective, if you are calculating an actual cost and you want that actual cost to be the standard cost going forward, you're usually going to set that standard cost for the following period. So let's say right now we are in January and I'm running an actual costing run for December for a prior year, right? So I'm running an actual costing run. All my processes have already been closed. I'm good. I'm ready to basically calculate my periodic unit price and update that. So I'm running through that and I want to set a marked price. I'm actually going to set that marked price for February, right? Because I'm saying I don't want to mark and release that price until the first day of the month, which is usually a standard process. And you're not going to set that until February 1st. So just to note that there's some timing pieces in regards to when you're setting that marked price. Now, with some of the newer updates, there is an option that you could take that marked price and set it for today and then release it. You just have to understand what are your normal processes and how you want the impact of that valuation change to occur. So then that really, going back to this, that really covers your actual costing run. And I'm actually going to step back just to this actual costing run cockpit. So we've gone through selection, preparation, settlement, post-closing, and mark prices, which is optional. So these are the steps really from an actual costing cockpit perspective that you would walk through in order to basically calculate and post your actual costing. So then within actual costing, in the actual costing umbrella, there is what's called an alternative valuation run. Now, alternative valuation run used to be its own standalone transaction, but with recent versions of S4, it's been collapsed into the CKMLCP transaction. So you'll see that it's actually an option, here. This is basically the same costing run cockpit, but with an alternative valuation application here. And you'll see also with Alternative Valuation Run that there's a step for determine actual prices. So let's step through the Alternative Valuation Run. The key difference between the actual costing run and the AVR run is that application and the run settings. And typically what I've seen is that you use a classic AVR setting for the Alternative Valuation Run. And then the key differences, some more key differences are if you want to do with run reference, the initial period. So one key thing to note here is that an ABR can be done across multiple periods, right? So an actual costing run can only be done for one period, where an ABR can be done across multiple periods. So let's say, for example, that you only calculate your actual activity rates once a quarter and you want to incorporate that, or you want to go and you want to take an average of, all your variances across the quarter or across 6 months, or, whatever the period is you're looking at, and you want to average that to get an average actual cost, then you can do that within an AVR run. So with an alternative valuation run, some additional differences in settings. So you have whether it's a posting run or not. One key thing to note is that for an actual costing run or an AVR run, you can only have one posting run per period. So let's say that you've run actual costing on a monthly basis, and now you want to do an AVR run at the end of a quarter, and you want to calculate that actual cost across the quarter. Well, you can only get to choose one of the two to be posting. You can't have both the actual costing run and the AVR run to be posting for a given period. Then, accounting principle. So if you have a different accounting principle, if you're really looking more at sort of like a parallel ledger or parallel accounting approach, then that functionality is there. Whether you want a successor run. A key thing here is whether you want what price you want to use for your actual valuation. So whether you want to have an actual activity price or value brought into the calculation or not, whether you want to credit, cost centers in the revaluation of consumption, all of these different pieces as you go through, you're making those choices on how you set up that alternative valuation run. Some other pieces, valuation alternatives. This is not as commonly utilized, but this is something where if you have other valuation alternatives like LIFO or FIFO, that would come into play. And if you want to bring in those exchange rate differences as well. And just moving through that, this is really all about what is the alternative valuation run, and here are the settings. And so that really gives you a picture of like some options, right? So you have your actual costing run, right? And that is the core of actual costing. The alternative valuation run gives you another approach or another methodology by which to run your actual costing, and some more flexibility there. And then that really wraps up actual costing. So this is really looking at it from a, like, how do you do actual costing, right? How does it work within the system? What does it look like? Just giving some visibility as to those who haven't seen it before, especially, what does the actual costing cockpit look like? What does it take to set up all those things? So, wanted to move into really like the pros and cons of actual costing, right? So, we're talking about here, why would you activate actual costing? Why would you utilize it, right? So some cons: it requires configuration, activation, and testing. I mean, this shouldn't be a surprise. Any newer functionality or kind of enhanced functionality that you want to use in SAP, you're going to have to configure it, you're going to have to set it up, you're going to have to activate it. So it does take some time in usually a project to do that. And one thing is it adds a new monthly process, right? So it's adding in that actual costing run and the actual costing cockpit. So, it's a note there, but if you have processes where you're analyzing those variances and you're doing something with those variances, such as capitalizing them, then essentially you should be replacing those with the actual costing. Some pros: it eliminates that need for those capitalization of variances. It should provide a closer compliance with US GAAP. So you shouldn't have to say, like, you say, my system provides this. It has standard cost, it has actual cost, it brings that together. It provides that better level of detail. So that total inventory valuation, right, is now valued, with the variances in it, and it's at a very detailed level, right? So you're no longer doing that capitalization at a product line level. You're really seeing those variances attributed to the materials directly. And it provides more accurate cost for your margin analysis. So if you're like, if you're in a situation where your margins are fluctuating, or you really are not feeling like you're getting a good grasp of, oh, what are my margins? Like I see a margin in January, but then a bunch of variances come in in March, or, and that all kind of comes in, and it changes things from a margin analysis perspective. Well, if you're running actual costing on a monthly basis, then you're really seeing those variances being attributed in the month that they occur. And you're seeing that capitalized into your inventory value and into your cost of goods sold. And then it provides more accurate inventory valuation. So overall, just really giving you a better picture of what things look like from your balance sheet perspective, as well as your P&L perspective, as it relates to the cost of your materials. So some relevant SAP notes to make sure that you keep an eye on. This 2230091, this one is the actual cost component split activation. So if you're using the cost component split functionality, then especially with S4 in that functionality, then this brings that into actual costing. And then this 3147-202, this is a list of the startup programs for material ledger and actual costing. Keep an eye on that. That has changed some over time. This note 3256792, it's really helpful as far as the generation of the cost component split. So if you have that activated, it just simplifies that conversion step. And then the ML help desk. So this note is a collection of corrections for any data defects and things like that. And so it includes a list of all the notes to be applied per version, and it's really helpful to take a look at that and make sure that you have all the notes that you need for your version. All right, well, that kind of puts us close to time. There was a lot of content here, but just a couple pieces from a resource standpoint. I have to give a lot of credit to Paul. He wrote the book on Material Ledger, and I highly recommend it for anybody who is embarking upon a Material Ledger implementation, whether it be an upgrade or an actual costing implementation. This is really the guidebook for how to do this. And Paul's done a great job with his book there. And I'll just one more reference, or a couple more references here. Also, Tom King wrote a book for espresso tutorials. I've used both side by side. They both have some good key pieces. There's sometimes I'm like, something in Tom's book that really, kind of like lights, oh, okay, that, light bulb there. And then there's other pieces in Paul's book, which really, like I said, it's like the Bible for Material Ledger. So, and then just some other references. It's a good article out on LinkedIn on the lower of cost or market and the standard costing system. And then Ashish Sampat has done some really good presentations overall on controlling and standard costing, and some really good references there. So overall, thank you for this time, and I hope that you've learned some things, and I'll look forward to working with you on Material Ledger actual costing. I'll turn it back over to you, Paul.
Thanks, Dawn. Hey, great content. I hope everybody found it valuable. I definitely did. One can never know too much about this topic. It's pretty dense, and there's a lot to it. Just in the interest of time, I'll ask. I'll read out a couple of the questions now. Just for anyone who hasn't attended our webcast in the past, we respond to every question, even if we can't do it within the time. So we will post the answers and send them to everyone who registered for the webcast. So bear with me if you don't see all your questions answered right now, but we will answer them. So the first one is, can we display the actual cost of a material, both of group currency, for example, euros, and company code currency at the same time? Is it correct to use both currencies types or not?
So yes, you can display the actual cost in multiple currencies, right? So especially once you've actually done that actual cost calculation, right, then you should be able to see that in the accounting one view, right? So you'll see that periodic unit price, and you'll see it in multiple currencies. Any further thoughts there, Paul?
No, I think that's a great answer. say the same thing. The second one is a little longer, but I will make this the last question just because it is longer. The decision of activating actual costing can be challenging when it comes to the visibility of actual cost and cost component splits in the receiving company after an intercompany sale. Can you recommend a solution to roll up the actual variances from company A to company B? For example, company A's manufacturing company sells finished goods to company B, and at the end of the month, the actual costing is run, price differences are posted, and inventory is revaluated.
Okay. I mean, I would expect that to be part of your actual costing in your actual costing cockpit, right? So if you're rolling up all the relevant companies in your actual costing, then it should roll those variances and follow those across where it's consumed, right? So that component is then being consumed, it's sold and consumed into a product in, another company, or however that flow of transactions, those variances should follow, and then that should roll up.
Okay, great. And I just add to that, with group, if you have group valuation active, it'll happen as standard. If you have if you don't have group valuation active, there is still a function. The standard functionality is called the log MMSIT functionality, and it allows you, even with legal valuation, to transfer variances across companies for your actual cost. So, hey, lots of other good questions, but we can't get to answer them today. Sorry about that. But like I said, we will have those answered and sent to everybody. So thank you very much for attending this first webcast of 2024. I wish you all a great rest of the day and hope to see you in the next webcast. Thank you very much, Don, for a great job in the presentation.
Thanks, Paul, and thanks everybody at ERPfixers. And it's great to have such a good audience, and we look forward to the questions.
Thank you. Bye.